Welcome to TNM TV News. I'm Alicia Hyatt, editor of miningmarkets.ca. This year's Prospectors and Developers Association of Canada conference, held in Toronto in early March, attracted a crowd of 25,000 people. While that number was down by about 5,000 from last year, the mood was hopeful that after a 3-year slump in the mining industry, the worst may be over. Incoming PDAC President Rod Thomas said that miners are feeling optimistic about 2014 because of a recent rebound in the gold price and in the market, along with a lower Canadian dollar.
My sense is that we've been sort of hunkering down over the last couple of years, and my sense is that we sort of found a floor, and that we're starting to see that perhaps we're on the beginnings of an uptick in the commodity cycle. I mean, anything can happen, but certainly it looks a lot better now than it did, say, a year ago.
Even so, financing is still hard to come by for many companies that need it. Alternative financing was again a topic of interest at the convention, as it has been for several years. This time, however, there were speakers who specifically addressed the growing interest of private equity in the mining sector. Stephen Stewart, a managing partner at private equity firm Minvest Partners, helped organize the private equity sessions at the convention this year. He says that while there have always been specialized private equity funds that have invested in mining, larger generalist funds are now becoming interested because valuations in the sector are so low.
Now that the institution and the retail investors who play this space over the past many decades, they've left. And the issuers aren't getting their phone calls returned by that particular group. And that in turn lowers valuations in company and people who lost their money and they don't want to invest. So the net result is assets are available cheap. These private equity guys are sophisticated investors. They know how to value opportunities, they know how to price risk, and they see things cheap. And so they want to get in there, they want to accumulate, provided it's the right asset, right management team, and then they want to, they'll look to exit when the cycle comes back, and it will.
Investor interest in the junior miners may still be tepid, but John Kaiser of Kaiser Research Online says that there are legitimate juniors that are worth looking at now.
This is the best window to look at resource juniors. We've had a 3-year bear market, and in fact, if you're trying to be a pure bottom fisher and pick the perfect bottom, that is still extremely dangerous. Almost 700 Canadian listed juniors have a negative working capital. That's about 30% of the whole bunch. What you look for now is companies that have risen off the bottom 50 to 100%, and that's the market doing your homework for you. We are in a selective resource sector bull market.
That's it for now, but please join us next time for our full interview with John Kaiser. And don't forget to check out northernminer.com and miningmarkets.ca for the latest in mining news. Thanks for watching.